going to draw some lines to help you visualize, what is what AOS is all about, as where we took the trade, etc. Okay. Okay. Market has come now. He has broken this support. Okay, he has broken this support. Okay. So from here to here, there's a price break. Okay, as COP, we do not just jump in to take a short trade here, for example. Okay, the moment there's a price break, because a price break may be false. You may have a price break, okay, it dropped a little bit, then it shoot all the way up again. Okay, a false break. What we want to do, remember price action, it must have an oscillation, whether it's an up oscillation or a down oscillation. Okay, so the blue bars have started. This is a retracement, okay, a pullback. Okay, at this point in time, okay, our chat room will suddenly turn very quiet. We have a live chat room during trading session. Our chat room will be very quiet because the members will be looking at the chart. Those who are trading AOS will suddenly just focus, will pay attention on the chart and look for the down oscillation to take a trade. Okay, you can actually see that the market, the bars and the market, all this, the data don't come in that fast. It is, although we take our trades very quickly, our duration is short, etc. Okay, the signal takes a while to form. Okay, it doesn't mean that you need to glue your eyes at the screen, at the chart, okay, without blinking. Okay, you can do a lot of things, drink water, crack your knuckles, etc. just to wait. Okay. Okay, the first red bar has formed. Okay, you notice it's flickering red and blue. That's why we don't enter on the first red bar. Okay. We look for the second red bar for confirmation.
Order filled.
It was red, we entered. All right. So wait, let me just show. Okay. So we entered a trade here. We entered a short trade here. Right. So this is actually sloping down, a lower resistance. Okay. We entered a trade here as a AOS, the first down oscillation. Okay, sorry. I need to I didn't pause, so it's slow enough, so I don't have to pause to show you guys. So after we have taken a trade, okay, we adjust our stop. Okay, we entered a trade at 3334.00. This is our target 3 points away. This is our stop. Okay, this is our stop, which is about 5 ticks away, 1.25 points. Okay, 1.25 points away. So our risk to reward ratio in this case, that means how much are we risking to take this trade if this trade goes against me, is 1.25 points. Okay.
Your profit target has been reached. How
much can we potentially gain from this trade? What's our profit? It's 3 points. Okay, so it's actually a 1 to 2 risk reward ratio. Right? How long do you think we were in this position, the duration of this trade? Okay. We enter a trade here, right? Okay, can't see very clearly, but you can see that it's 44-26. It's actually 10:44:26. Okay, 10:44 we entered. We got out somewhere here at 10:45. Okay, so this trade lasted about 1 minute. 1 minute. Okay. Okay, let me just clear everything here first. Clear or dry. All right. Okay, so that's AOS, right? Quite simple, right? You just identify the first up oscillation or the first down oscillation. Okay, as long as you're going with the trend. Okay. Would you like to see another demonstration strategies? Okay. Okay, the next one I'm going to show is a reversal trade. Okay, what we call a GTR. Okay, this happens to be my favorite strategy. I use a lot of this. All right. What it means is that if the market has been going upwards, up, I'm looking for a point where the market is going to turn down, okay, to take a short trade. And if the market has been coming down, for example, I'm looking for a point, okay, where the market is going to reverse upwards for me to take a long trade. Okay. Now, because I'm taking reversal, okay, I need to be a little bit more precise. I need to have more filters supporting parameters so that I do not so-called gamble, okay, or gamble in the sense that, or second guess, could this be the right turning point or could this not be the right turning point, right? So with GTR, I have the 3 parameters there. Okay, look at this chart here. Okay, what I need first of all, is that I need this thing called a divergence. Okay, see, market has been coming down, right? Market has been coming down, drop all the way down here. Okay, as it goes into a retracement between this support and this support here, this cluster of red bars, the lowest point here. Okay, if I were to draw a line connecting these two supports, it's sloping downwards. Okay, can you guys see it? Now I'm going to drop these two supports down to where the indicator is here. The first one is here, where the red and blue line meets the intersection point, right? The second one is here. So this is sloping upwards. It's going different direction, right? This is sloping down, this is sloping up. Okay, this is what we call a divergence. A divergence. Okay, so for me to, if I were to use GTR to trade this strategy, I need 3 parameters. This is the first parameter that I need. Okay, parameter 1. I need 2 other parameters. You look at the windows of these 2 charts. They are blue in color, right? Here, blue, this one blue. Okay, for me to take a long trade, not only do I need this first parameter, a divergence, I need parameter 2. This window must be blue. Parameter 3, this window must be blue as well. So if all 3 parameters are present, okay, I'll pull the trigger to take a trade. Okay, and this was one of the trade I took. I entered at 2162.75. Okay, 2162.75. Okay, same thing, set your target. Okay, if this is a counter trend trade, just aim for 2 points, get out. Okay, over here, once it hits the target here at 2164.75, 2 points away, the system will close off your trade automatically, and then you get out with profit. You do not have to manually exit the trade yourself. Okay. All right, same thing. I'm going to give you a demonstration on this particular strat, but you need to give me about a minute or so. Let me kind of reset the chart, okay, to this particular example. Okay, like I said, the charting software, the VX charting software, right? Okay, what they do is that they will collect all this data, all this the market data live, okay, on each day itself, so that when, if let's say you miss a particular trading day, next day you want to practice, you want to know what the market is doing, you, as long as you have internet connection, okay, you can do what I just did, select the date, etc. Okay, go to the, what it does is that it goes to the VX server, it pulls in the data, just like what it's doing now. So once it hit the target time, the time that you chose, it will automatically, the charts will automatically be populated. Okay, right? So let me just adjust it a little bit. Okay, remember what I said about GTR? GTR is a reversal. Okay, so if market has been going up this way, I'm looking for an opportunity, the reversal, right, for market to turn down, isn't it? Okay, that's why I do not want to second guess. I need parameters there to support, to let me support that, hey, this is actually a very, very high possible turning point. Okay, right? So if you look at this particular example here, okay, let me just draw in the thing. Okay, if you look at this particular example, this is sloping up, this is actually sloping down. Okay, I have a divergence there, no? I have a divergence here. Okay, when the red bars here form. Okay, why didn't I show you this example to take a short trade here? Okay, look at the other 2 parameters. For me to take a short trade, this window and this window needs to be red in color, right? But can you see that this is actually blue in color, but this is red in color? Okay, I only have 2 out of the 3 parameters there. That's why I cannot take a short trade. Okay, so what's going to happen is this. It's going to give me another up oscillation. The blue bars are going to come out. it's going to go up higher than this resistance point here. Then the red bars will form, will come down. Okay, when the red bars form and come down, you will notice here between these two resistance is sloping up. Okay, sloping up, and over here it will be sloping down. That's where you get the divergence, and these two windows will have to be pink in color. Okay. Okay, it's going up. Okay, and it's gone up, and it's from a resistance here which is higher than this resistance, right? So when it comes down, when the red bar appears here, this will be sloping up and this will be sloping down. Okay, first red bar. I need the two windows there to be pink.
Order filled.
Okay, my order got filled, all right? Let me just pause it so I can draw the line for you guys to see, okay? Okay, so this is actually sloping upwards. Okay, this is sloping downwards, all right? And I took a trade here. I pulled the trigger here on the second red bar, okay? My order was filled somewhere here, which is okay, right? So that is around the same point I put. Okay. Okay, so I took a trade. Again, my entry here is 3343.00. That's where I shorted with one contract. My target here, 3 points. Okay, this is my stop. So again, my risk to reward ratio is 1 to 2. Right? I risk 1.5
Your
points.
profit target has been
Go
reached.
for 3 points. Okay. How long do you think we were in this position again? Duration of this trade. Okay. We entered about 9:34. Okay, we got out here about 9:35, right? So about a minute. Okay, these two examples which I showed you happens to be fast example. Okay, fast example. They happen within 1 minute, right? I do not want you to sit here for 5 minutes waiting for the thing to you know the target to hit. Now, you're not going to see 1 minute for every trade that you take duration. Okay, I said in the beginning, duration of your trade typically 5 to 10 minutes. Okay, most times. Okay, sometimes faster, sometimes slower. That's right. Okay, let me clear this. If you are interested to find out more, okay, you can always go to YouTube channel. Okay, you can type in concept or price. Okay, and I did do a few videos on our strategies. Okay, so you can actually go and find out more about it, or you can even go to our Facebook. On Facebook, I usually post out what we call end of day signals or entries. Okay, for example, again in Facebook, you just have to search for concept or price. For example, this happened last week. Okay, bear in mind this is summer, all right? The market is slower volume, so but if you just be patient enough, this was when market started at 9:30. This was about 11 o'clock, about 1.5 hours. There were actually 5 entries. Okay, there were 4 winners, one trade that didn't turn out very well, and it also happens to be a trade that I took. Okay, so this one, first one, how do you know? Okay, if you look at all the markings, okay, all those that has a price behind, like 4450.5, this one here, these are trades which I personally taken. All right, those markings that do not have a price behind, these are all valid entries, but I already finished trading already. So once I hit my target, I will stop trading for the night, close shop. Okay, how do I account for this losing trade or this bad trade? Okay, if you look at this marking here, there's an asterisk sign behind, right? Okay, this is a trade which I took. But instead of giving me my profit, it turned up and took me out. So it ended up as a loss for me. Okay, loss. Okay, but you can see here that, remember what I said, your capital is freed up immediately. So the next entry that comes along, I can quickly take advantage of it. All right. Okay, these markings are all marked as and when it happens. Okay, it's not marked on a hindsight basis, because sometimes during a trading session, halfway through, members may ask me in the channel, Marcus, can you please post your chart? Okay, if I have not marked anything there, I'll be posting an empty chart. And I need to post it, I need to mark it there and then, because I need the parameters. Remember the windows that shows whether it's blue or red color? Okay, those, they may flicker a bit here and there. So the one, I need to make sure that the parameters are there before I mark it. Okay. This was a couple of days ago. Okay, right. So on this day itself, okay, this night itself, there were actually 7 entries. Okay, there were 6 winners and 1 loss. Again, my first trade here was losing trade. Okay, right, losing trade. Okay, but we can make up for it pretty fast. Okay, in a sense. So the strategy gives you the edge. Okay, but that is not enough, right? You need to learn how to manage your risk. Okay, this is money management. Because if you have this no discipline in money management, excuse me, you're going to blow out your account anyway, right? One bad trade can wipe out almost everything. Right. Now let me ask you something. When you are when you consider a program that you program to trade, program to go through to learn how to trade, what's the one thing that will attract you? Is it a program that promises you a very high percentage of good trades? Or in other words, do you feel that you need a very high percentage of winning trades in order to be consistent, in order to make profits from the market? If you feel that way, can you please type in the chat room? You can select my name and type to me directly. Do you feel that way? Do you feel that you need a very high percentage of winning trades in order to be consistently profitable? Okay, when it comes to trading. Anyone of you feel that way? Okay, some say yes, some say no. All right, thank you. Thanks for your response. Okay, now, what if I can show you that you don't need a very high percentage of winning trades? Okay, even with a 50% winning trades, okay, 50% accuracy system, so-called, okay, you can actually profit from the market. Okay, the most important thing here is money management. It's your risk to reward ratio. How much are you prepared to risk? Okay, how much are you risking in anticipation of how much can you gain from the market, profit from the market? Does it make sense for you to risk $2 to gain $1? Or does it make more sense for you to risk $1 to gain $2? Okay, this is what I mean by money management, right? So even with a 50% accuracy system, okay, 50% accuracy system, okay, that means you risk 1 point to go for 2 points, for example. Okay, in translate that to ES, okay, you're risking $50 to go for $100. Okay, now over 100 trades, okay, 50%, 50 will be winning trades, right? So 50 times $100 profit per trade gives you 5,000 US. But the other 50 trades are going to be losing trade. So 50 times $50 is negative 2,005. Okay, so 5,000 minus 2,005, are you still profitable? That's only 50%, Okay, but the risk to reward ratio here. Okay, how about 40% accuracy? Okay, 4,000 minus 3,000, are you still profitable? Well, less, but still profitable, right? Okay, what's the key? What's the constant here? Risk to reward ratio. Okay. But what if it's even lower at 35%? Okay. Right, 3,005 minus 3,250, you're still positive. It's just lower, much lower, right? The constant risk to reward ratio 1 to 2. Okay. So I hope I given you a sense that, hey, look, it's not about very high percentage. Okay, you can have very, very high percentage. Okay, but if you don't have a good risk to reward ratio, you don't manage your risk properly, one bad trade can just wipe out everything. And we have seen that. Okay, I'm sure you have heard of people who are like this also, right? Now, you won't get there initially with if you're new to our the way we are trading. Okay, many of our members start off, okay, they start off practicing and then they went live. Okay, they are hovering around maybe a 60-65% win rate, right? Which is okay. But over time, I've seen some of them gone up as high as 80, 85, 90% win rate. Okay, but let's take a lower figure of about 70%. All right, about 75%. Okay, based on one contract you're trading. I'm not talking about multiple contracts. One contract. Okay, one contract. Okay, if you have a 75%, you maintain a 1-to-2 risk reward ratio. Okay, 7,005 minus 1,250. That is 6,250 over 100 trades. Over 100 trades. Is this enough? Okay, think about it. This is one contract. What if you're trading multiple contracts, like 5 contracts? Okay, 5 lots, for example, 5 contracts. That is easily 31,000. Okay, over 100 trades, right? So again, you have the age, you have the risk management, still not enough. You still won't be consistent because, okay, you need to have a trader's mindset. This is the third tool that you need. Okay, you need to develop a proper trader's mindset, and this is what we term trading psychology. And in COP, we don't just focus on how to take trades. We don't just focus on how you should take trades with calculated risk, for example, risk how to manage your risk. We want to train you up in terms of how you should be thinking, how you should be reacting, how you should position yourself, okay, when you come into the market every trading night. Okay, why is trading psychology important? Okay, some of you here have traded before. Okay, has it come to a point in time? Has it come to a point, or at any point in time, have you ever experienced this called fear and anxiety? Okay, or maybe you've gone through a series of bad trades. Then the next trade that come along, you start to doubt: should I take? Should I not take? Should I take? Should I not take? Okay, there is anxiety there, right? Okay, now if you have a proper trader's mindset, you realize one thing. Okay, trading is just a probability. It's a probability game. Okay, as long as you have a system that has been tested, okay, you believe in your system, you have proper risk management, okay, and you believe that trading is a probability, if you keep working at it, okay, remember, even if it's 50% or 40%, you can still be profitable. Okay, there's no such thing as every trade is a winning trade. Okay, right? So trading is a probability. Now, if you look at this chart here, all right, this chart here, it represents 100 trades with a 70% accuracy. Okay, 100 trades with a 70% accuracy. Now, if you notice, if you think for yourself, if you were a trader, you're a trader. Okay, you took the first trade here. It was a winning trade. You make $100. Are you happy? All right. You took a second trade here. You make $100. Are you happy? Sure. Who's not happy making money? Correct. You took a third trade here. Ding. Okay, but you followed the risk to reward 1 to 2. Okay, you lost $50. A bit sad, but never mind. Okay, because you still are, after all, it's only one trade, right? You took the fourth trade. Again, it was a bad trade. You lost another $50. So from 200 now down to 100. Okay. Come to the fifth trade, another one bad trade, another bad trade, another bad trade, another bad trade on the eighth trade. At this point in time, are you going to give up? Will you give up? Will you say, oh, cannot, my system is wrong. I don't believe in this system anymore. Something is wrong with that thing. Okay. But if you don't take the 9th trade and the 10th trade and the 11th trade and the 12th trade, will you recover? No, you won't recover. Okay. Just because it's a 70% accuracy system does not mean that you have 7 good trades, then you have 3 bad trades. 7 good trades, 3 bad trades. There's no such logic because the market is random. Okay, market is random. Okay. So this is what you're going to learn in trading psychology. Okay. Have you also come across situation where a trader gets greedy? Okay, get greedy, right? Okay. Make money really, don't want to leave the table. Just a casino. Okay, just a casino. Right? People win, don't want to leave. They want to carry on. What happens? They give back everything. Okay, they give back everything, and then maybe even lose some more. Okay. So how can we do this? Okay, this is our advice to you. Okay, things like setting daily target. Okay, how much of a maximum loss you need to set all this maximum loss a day, maximum target, all this. Once you hit it, stop trading. Okay, stop trading, close shop. there's always another day to come back to. Excuse me. Sometimes this gets the better of good traders. Okay, why? Because, and sometimes in the chat room, you're watching, and then you at the 9:30 market start, right? Then at 10 o'clock you see people say good night, I'm done. 10:05 you see another fella say, hey, good night, I'm done. 10:15 you see another fella say, hey, I'll see you tomorrow, I'm done. Have a nice night. Then you ask yourself, these people done already? I haven't even taken a single trade there. Okay, so what happened? Okay, you get impatient, right? You get angry, you get jealous, you get envious also. Most people can clear. I also want to sleep. So what you do? The next signal that comes along, never mind lah, 2 out of 3 parameters there, last parameter not around, never mind, just whack. Wow, then whack, you take a trade, it didn't go your way, it took you out. Then you get angry. Then you get angry, what happened? You want to revenge the market again. Come on, all these are emotions. We all go through this. Okay. So again, if you have a proper trader's mindset, okay, you will learn things like this. Learn how to let go. Learn how to accept what the market can give you only. Okay, all these seems like mumbo jumbo, right? But you realize, okay, that while you're trading psychology is very important. Okay, and you control only what you can control. Okay, so trading psychology teaches you things that you learn how to develop trust in your system. Okay, you learn how to handle losses and winners. Okay, learn how to handle losses, makes sense. Winning also must learn how to handle one. Okay, yeah. Okay, we'll show you why. All right. Learn that fearing the market is irrational. Why? Because market is random. Okay. Right? Market is not targeting you. It's just random. Okay. Learn why you are making silly mistakes and learn from there. Okay. Most important thing is that at the end of the day, you will learn and understand. You will learn about yourself. You will understand yourself a lot more than before you started trading. Okay, you will identify your own weakness. Okay, and overcome it. So, okay, the key to consistent trading, okay, is this thing called the REP system. Okay, you need to have risk management. You need to have a winning edge. Okay, you need to have a good trader's mindset. Okay, with all these three, okay, internalized, you will be able to achieve consistent profit. Okay, and this is what we focus on a lot. Okay, and someone who has gone through all